of the key takeaways. Now, broadly at the headline level, the numbers were fine. Q2 has played out in line with street expectations. So on the top line, you would see that most of the companies delivered, like Infosys delivered versus expectations, TCS delivered, HCLTech and Wipro were a beat. The margin performance was mixed this time vis-a-vis expectations. So on one hand, you had a TCS and Infosys missing the mark, but again, Wipro and HCLTech's margin performance was higher than consensus expectation. There are two key trends which have emerged. One is continued momentum in BFSI. It started in Q1 and it's played out in Q2, and the management commentary seems to suggest that it's more broad-based this time. Some of them are talking about discretionary spending picking up in the BFSI segment, and almost all of them are confident that the BFSI momentum will sustain going into Q3, and this is about 30-35% of the industry revenue. And the second trend is there is a pickup in hiring. Remember, the IT companies went through a long period of headcount rationalization, almost 1.5 years, and now finally you are seeing some hiring pickup. It's seen as an indicator, a forward indicator of demand picking up. But what's the way forward now? Now, come Q3, the outlook is a little bit more muted, largely on account of furloughs and lower working days. So you have a Wipro, which gives you a quarterly guidance, and they're talking about a -2 to a 0% growth in December quarter. Now, Infosys full year guidance, which got upgraded this time, still bakes in about a flat growth in Q3 and Q4 if they have to achieve the middle end of the guidance. Also in the coming quarter, in Q3, you'll have the wage hikes. So companies like HCLTech, Infosys, LTI, Mindtree, Wipro also will have a 2-month wage hike impact. So that will hurt margins for the companies going ahead. Now, keep that in context with the kind of up move the stocks have seen. So on an average, companies are up between 20 to 40%. Names like Infosys, which corrected sharply post numbers, that stock was up nearly 40% since the rally began in June. And this is how the valuations stack up. So it's TCS still right on top of the pack. Infosys retreated a bit after the correction. HCLTech and TCS's valuations are pretty much at par right now, and it's Wipro which is lagging behind. So Wipro's valuations are at a discount, and that's one of the reasons why we've seen the Wipro stock price do well post the numbers came in line with street expectations or marginally better. So Mahesh,
thank you for watching CNBC TV 18. For all our top stories and news updates, follow us on our social media platforms.